Welcome back to our channel, where today we're diving into something absolutely fascinating that's happening right now with China's Shenzhen Composite, the stock market equivalent of giving a toddler 15 espressos and a paintball gun. Yes, that's right. While most Western investors are busy watching paint dry on the S&P 500, the Shenzhen market is putting on a show that makes Fast and Furious movies look like they were filmed in slow motion. For those unfamiliar with the Shenzhen Composite, it's essentially China's version of the Nasdaq, except with more dramatic plot twists than a telenovela. It's up 7.36% year to date, which sounds impressive until you realize it's achieved this by moving like a kangaroo on a trampoline during an earthquake. Looking at this chart, we can see the market has been bouncing around like a ping-pong ball in a lottery machine. Our technical analysis shows we're approaching what experts call the dragon's nostril pattern. That's when the market goes up, down, sideways, and possibly into the fourth dimension all at once. Even our resident pessimistic market analyst is confused by this one, and he once predicted a global recession because someone used the wrong shade of red in a Chinese New Year decoration. Now, let's talk about timing. March 24th and April 1st are lighting up on our charts like a Chinese New Year fireworks display. These are what technical analysts call directional change dates, fancy jargon for the market might suddenly decide to go somewhere else. It's like your GPS recalculating, except instead of finding a new route to Starbucks, it's potentially wiping out your retirement savings. The really wild part? Nobody knows if March 24th will be higher or lower than April 1st. It's like Schrodinger's stock market, both bullish and bearish until you open the trading app and collapse the wave function of your portfolio. Our analysis suggests there are three possible scenarios: up then down, down then up, or just complete chaos. Very helpful, I know. Zooming out to the weekly picture, we've got a key support level around 2080 to 2050. If the market drops below that, it could test deeper support at 1991.6e, which coincidentally is also the year I made my first terrible investment decision. At least the market and I have something in common. So what's the strategy here? Well, for the brave souls looking to go long, late March might offer a buying opportunity if prices dip near 2085 for 2050. Just make sure you've got your stop loss in place, or you might find yourself explaining to your spouse why the kids' college fund is now worth less than a used bicycle. For the bears among you, shorting around March 24th or April 1st could be the play if the index pushes above 2132, 2142 but fails to close higher. Just remember that shorting Chinese stocks is like trying to catch a falling knife while blindfolded and riding a unicycle, technically possible, but with a high probability of pain. Looking ahead, we've got potential drama on March 24th, more drama on April 1st, and potentially the season finale of drama around April 21st. It's like the market is writing its own Netflix series, and we're all forced to binge watch it with our money on the line. The bottom line? The Shenzhen Composite is currently putting on a masterclass in market indecision. It's like watching a squirrel try to cross a busy street. Lots of starting and stopping, and you're never quite sure which way it's going to go next. Whether you're trading this market or just watching from the sidelines, one thing's for sure. It's more entertaining than most streaming services, and potentially just as expensive. Before we wrap up, if you found this analysis helpful, please subscribe to our channel for more insights that will either help you navigate these turbulent markets or at least give you something to laugh about while your investments are doing the financial equivalent of parkour. Remember, in Chinese markets, the only thing more unpredictable than the price action is trying to use Google Translate to read the company reports. See you in the next video.